Okay, good morning, everyone, and welcome to another episode of the Crypto Hour. Jaya, if you don't mind, I'll make you co-host. Yeah, so we can let people in as they come in. Okay, I wasn't here last week, so we will cover a couple of weeks of news, as there's quite a few things to talk about. The principal things in economic news has been, the increase in interest rates in the US a couple of weeks ago, and especially the Jerome Powell's tone on when he did, he announced this afterwards, and also the downgrade of the US credit by Fitch credit rating, and see what that means in general, and what that means from the main buyers of US debt in the market. And then we'll go and have a look, obviously, the more crypto related news a little bit later on. Okay, let me start sharing the screen straight away. Okay. Can you all see my screen? Yeah. Okay. So first of all, I just wanted to show you, there's been a lot of talk of artificial intelligence. So I just wanted to show you something so that you can realize the basic of artificial intelligence and how that can change. Hey, was that impressive or not impressive? Now, by the way, there is no ping pong playing robot. Okay, that's completely fake. But it shows you how good artificial intelligence is at changing the. That was a real player, actually, but just the robot was superimposed on a real player. And so I just wanted to show you the effectiveness of fake videos. Okay, so this is really a fake video, and now, especially with the AI, this has made this process a lot easier. You are likely to see a lot of videos on the internet of what it looks like real people talking and discussing things which they never said. Okay, and this is one of the main tools. The reason why I showed it to you, because this is one of the main tools used by scammers. So you're likely to see, somebody that you recognize, maybe Elon Musk or Michael Saylor or something like this, talking about something, and then with a big links on the side saying, I don't know, send me 1 Bitcoin, I'll send you 2 Bitcoins, and something like this. Okay, and there are so many of these videos, and the video platforms have got no interest in removing them, because these videos pay them a lot of advertising to actually appear in your feed, and even if they remove them, within 10 minutes another one pops up. So so be careful when you're online, and also look at things that look a little bit unreal through this lens, okay, because not everything you see is actually real. Okay, let me go to this. Okay, and first of all, I want to say that when I'm sorry, let me just step back a little and look at and get the Zoom controls out of the way. So this is kind of the economic calendar for this week, and this is the one for the week before. So this is when the I would say the federal funds rate was announced, the 26th of July, and the statement. So the statement is actually more important than the announcement itself, because everybody was expecting, as you can see, the middle column is the forecast, so 5.5%, and this was exactly what was announced. But what is more important is the statement and the press conference afterwards, and this is what everybody listens to, because they want to understand what the not so much what the announcement was, because everybody can see that, numbers are fairly easy, to understand. But everybody wants to understand what the policy will be for the future and what the approach would be at trying to steer the economy in the favored direction. Okay, and one of the main things that they use for this is the PCE. Okay, so the which is the inflation, a particular measure of inflations that they base for understanding if their policy is going in the right direction or not. I mean, the goal is to get this at 2% or below, or around that figure. And at the moment is trending down quite strongly, but not quite at that level yet. What we've had this week, nothing really of much interest apart from the base rate in the UK, which again, as expected, went up by another 0.25%. And the biggest announcement is probably today. For those of you that actually invest in the markets, the Friday when we have the non-farm employment change announcement, that's probably the biggest announcements of the month. That tend to move the market quite strongly, especially if there's a little bit of a surprise. Now, so be careful. Let's say if you do invest in the market, especially on a day trading basis, these announcements will be at 1:30 p.m. UK. So obviously this is my calendar. Okay, so this is UK time, or 8:30 a.m. in the US. So be careful, like half an hour before and half an hour after. That hour is going to be very, very volatile. Okay. Now let's go back to the figures and what Powell said. Okay, what Powell said on the 26th is that he said, and I just read it. Sorry for a second. You start cutting your way to neutral rate before you get to 2% inflation. So what that means is that they won't wait for inflation to be at 2% before they start cutting interest rates, but they just expect for PCE to be convincingly on its way to 2%. Now, what this chart is showing you is the blue line is the US nominal growth, okay, which is mooted down just to avoid too much noise. And that is added the CPI, so the consumer price inflation. Okay, so this is why you see figures of about 15%, because when inflation was running at above 10%, you add that on top of the nominal growth, and you get these kind of figures. What you see, there are very few cases when we look back at the past 20 years. So this chart goes back to 2002. There are very few cases where the federal funds, which is the orange line, are at a higher level than the nominal growth. Okay, so at the moment, federal funds are sitting at 5.25%, and the nominal growth at 3.5%. So when that happens, it puts a lot of pressure on the economy, because obviously the Fed funds plus another layer for private companies is the kind of funding rate that companies can borrow at, and so it puts the cost of doing business sharply up compared to the expectations of a growing economy. So now, as the cost is, I think, higher than the expectation of growth, as you can imagine, this level of funding puts real pressure on the economy. So what is the Fed trying to do? So from one point of view, I mean, they are aware of this chart. Don't think that they're not. But what they're trying to do is that by their talks is pretty much fairly clear that this is going to be the last interest rate rise. Okay, but on a deteriorating economy, even keeping the interest rate at this level will put increasing pressure on the economy. So what they are trying to do is that even by keeping the interest rates as they are and starting to lower them later, they want to keep the pressure on the economy pretty much even. Okay, so as the economy slows down, interest rate cuts will start to happen, but this will not kind of like decrease the pressure on the economy, because there's still a the interest rate is higher than where it would need to be for real equilibrium to happen. So what the goal of the Fed is to have the market at a level of equilibrium where the market grows at a steady pace, and at the same time inflation is stable. Okay, so so by keeping the rates steady and slowly decreasing them as the economy gets worse, they are trying to achieve their target of an inflation of around 2%. Now, so you can see the trend as well of the inflation, which was at so this is a core services inflation. It went down from 7.5% in June 2022 to now standing about 3.3%. So just from February to June, it went up by 2%, which is a big change. So you can see the trending down of the inflation figures. So the kind of disinflation happening in the economy. Now, what are the expectations of the market? And we can have a look at this, which is the market implied Fed funds. So between now really and 2027. So pretty much this is what the market, the Fed funds level at the moment, what the market is pricing Fed funds to be right now. And this is as it progresses in the futures. You can see the first cut is expected to happen in March 2024, and then several other cuts to happen in the same year to about 4% at the end of next year. So if you can imagine, now we are in August. So we are talking September, October, November, December, January, February, March. So about 7 months before we start seeing any cuts. At least this is not guaranteed, but this is what the probability, the market price probability of these changes happening. And as you can see, all the way, they will carry on to come down throughout 2025, and then stop for quite a while at above 3%. I mean, again, this is just probability. Okay, so it's not guaranteed. It could go lower than that if the economy shows further deteriorating, and it could be higher than that if the inflation starts going faster again. But this is what, at this moment in time, this is what the market expects, and then that is price. Obviously, the biggest thing is that these expectations are priced in the bond market, which is the largest market that there is, outpacing the stock market by many times. Okay, so the changes that happen in the bond market is what really tell us the direction of the economy. So what is supposed to happen in the equity markets? As you can see, again, look at this graph. So this is the difference between the real yield. So once you've taken away inflation of the US 10-year note, 10-year bond, which is now at about 1.5%. So this is not a bad return, actually. This is 1.5% above inflation. Okay, so by buying these bonds, you would have kind of like the treasury protected, inflation protected bonds. You would at least guarantee that your money doesn't lose any purchasing power. That it actually gains about 1.5% a year. And this is the the earning yield of the trailing earning yield of the stock market, which stands at the moment at around 5.2 for 5.3%. So the difference between one and the other is the risk premium of the investors basically require to take the extra risk of investing in stocks as taking the safe option of investing in treasuries. So so this difference is actually now very, very low, kind of like at about 3.8%, and which when historically is has been around the 5-6% mark. So at the moment there's very low incentive, so to speak, in taking the extra risk in investing in stocks rather than take the easy option. This is because of expectations again of the markets. Now, what are the expectations? And I'll switch in a second. I'm going to look at some real-time charts. At the moment, so this here, the orange figure is basically the inverse of the price earning ratio, which at the moment is standing at about 19.5 for this S&P 500. So the inverse of that is just about 5%. If we look at the earning per shares estimates for 2024, they expected to be at about $235. Once you multiply this by the expectation of price earning for 2024, which is expected to stabilize at about 20, so slightly higher than it is now, that would bring us to a total level of the S&P 500 expected by the end of 2024 at about 4,700 to 4,800. So if we look at where we are now, let me go on trading view. So if we look at where we are now on the S&P 500, so we are now at 4,500. We touched, so we are kind of like against the previous high of 2000 of April of 2022, where we went to 4,006, and earlier on in beginning of 2022, where we touched the 4,008. So from where we are right now at 4,534, we are talking about 200 points higher by the end of next year. So it's not a great number for the S&P 500. So we're talking about 5% of or less of increase in value from where we are right now. So you see why it isn't kind of like a fantastic time now to start buying equities, because we are at a very high level compared to the expectation of the markets for the next 2 years. So look at what the lows that we reached in 2022, so 3,005 against so a possible, let's say, earning of about 300 points against possible loss of more than 1,000. Okay, so the risk to reward ratio at the moment is not good. It's not good for equities. Let's go back now. In kind of like conviction against is this inflation going to continue? This conviction is quite high. So we can have a look at the difference in inflation swaps between 2024 and 2025, and I say these are being fairly stable, and expectations are for inflation to be a level between 2.2 and 2.6%. Okay, so there's very high conviction that this the current trend in inflation figures is going to carry on through to 2024 and then 2025. And this is also the expectations of the again, the yield in real in treasury, the yield in treasury bonds and the corporate bonds. So treasury bonds is what the banks can get their finance at, but not the private companies. So this is what obviously private companies pay a premium. So as you can see, the level of funding that the private companies can access the debt market is about 3%. And as you can see, this is higher than the level over the past 10, 15 years, and quite significantly higher as well. So if the market is expecting these kind of levels to continue, okay, what kind of expectations are there for the economy? It's almost like we are expecting for the economy to function without much change, with a much higher cost of doing business. So in a way, although there is very high conviction for this outcome, personally I see as a kind of like a bit of a Goldilocks scenario where everything goes exactly as you could want, and nothing ever goes wrong. Where history tells us that the kind of like the corporate markets are very, very sensitive to the level of cost that they can do business at, because any business it's doing business because they expect to earn, obviously to gain more than what they invest, and that kind of skews the expectations. So for being able to pay a higher cost of doing business, there must be a higher expectation of making money at the end of the process. And with a deteriorating economy, that the expectations of gain are lower and the expectation of costs are higher. So I don't, this is how I see it, put in very, very simplistic terms. So expecting everything to carry on as normal when conditions are getting worse is a little bit, for me, optimistic. So and you can see this is the again, the probability of funds to be at 3% of or below by the end of next year. As you can see, there are at the moment, this probability is almost not priced in at all. So there's a 20% market implied chance that the Fed funds will be at below 3%. So and you can see this has come down quite sharply from 2022, where we had priced in almost like a 70% chance of funds to be lower, and now instead, kind of everybody expects higher rates to be here for a longer time. Okay, so we now, where we've been used for the last, since 2008, we've been used to the economy growing with cost of doing business almost zero, interest rates very, very low, close to zero. Now the cost of doing business is 3% plus. Okay, so expecting the same returns is, for me, kind of like unrealistic. From the point of view of the American economy now, and we're going on to the other aspect, the other big news of this past couple of weeks, of the US being downgraded from AAA to AA plus by Fitch. Now, Fitch is one of the rating agencies with Moody's and S&P that price government debt all across the world. And obviously AAA is the highest possible rating, and which include the premium grade debt with almost I would say zero risk. We're going on to the next band now, from AAA to AA, and that is, although AA plus is at the top of the next band, there is a difference in risk between AAA and AA. Now, in practical terms, what does this mean? a difference in risk, would mean that generally speaking, that a country, a government will pay a higher rate to to people that want to buy their debt, because people think, oh, there is an increased risk that debt is not going to be repaid, and so I want more for for lending you my money. But from a practical point of view, who buys government debt, and in particular the the US debt? Apart from US debt is being used as collateral across the world, but also is being used by banks, pension funds, and big companies that deal in US dollars. Now, for banks, the rate between AAA and AA plus makes no difference whatsoever, because they basically give it assign it a risk of 0. So it doesn't make any difference, the difference in rating. And the same thing for companies and for pension funds. So the difference is more technical than anything else, but as we will see, the markets though have taken it in a slightly different way. Now, the reason for that is because and part of the reason for the downgrade was the big debate about the raising the limit that was going on between the the president and the and Congress for so long, that was taken right to the edge of the of the expectation. So Fitch downgraded the US because of this, basically for the government ground to a halt. So they downgraded more than the economy of the US, downgraded the admin or the government of the economy. Okay, and you're thinking they're not as reliable, they're not as as they once were. So we don't trust them 100% anymore. This is kind of like an interesting graph, because show you the increase of the level of interest payments in US debt, and we got now to the level now where we're getting close to 1 trillion per year simply on interest paid on the national debt of the US. As you can see, this being in the kind of like a 60 was maybe very close to 0 when we still had the gold standard, and then from 1971, 72 we started growing as we entered the era of the fiat standard, and there was a big increase after 2008, and now after the pandemic there's another huge increase in the level of the national debt, bringing the interest to be paid on it and growing quite rapidly now. And this is why this kind of announcement can have an effect on the future expectations of the market for the interest to be paid on the bonds, and it would bring also this figure quite carry on going higher as the debt grows, and because the US as an economy keeps spending more than what they generate. So they're still going and getting new credit cards out, basically, to spend. So they are so the US is such a rich country. The population as such is seen as such a rich country because they're living on borrowed money. Okay, and the borrowed money is what everybody else is using as the so the dollar as to be able to trade. Okay, so you can see why this also has a big effect in crypto, because crypto represents an alternative payment method, alternative payment network. But just imagine if we found all of a sudden something else to replace the dollar, call it whatever you want, whether it's a new currency that is issued by the BRICS nations, whether it's Bitcoin or whether it's something else, you can imagine what would happen to the debt that the US has accumulated. Now that debt that has accumulated, translate to above $100,000 per citizen. Okay, and if you just consider the citizens that actually are productive, we are going well over $200,000 of debt per person in the US. So it is a massive amount of debt. But as you can see, so this I was showing you the interest, the difference between going from AAA to AA plus. So even if you went, so there are three, there's AA plus, AA, and AA minus. So all those three classifications, there could be two further downgrades, and literally wouldn't make any difference from the point of view of institutions buying US bonds until the next level, and the next level of classification that we're going on to the single A rating. And the risk weight, why this is important? Because the more risky an asset is, the more banks need to keep in reserve for their collateral. And at the moment, there is no collateral needed to put money into US bonds, and the bonds of all the bond issuers, they have a AA credit rating, so they don't need to keep any of that in reserve. So for them, it's much easier, instead of having cash, to just put it in bond, because at least they get a return. Okay, so their cash is working for them, and they can. It's pretty much as liquid as cash, because they can, they can use them. They can use them and liquidize them as needed. So from the point of view institutionally, this makes no difference at all. But obviously, it has made the markets very, very nervous. So we can see as well, going back in time, what happened in 2010. When there was the last downgrade of US debt, when there was a very high volatility for quite a while. The same thing hasn't happened now. So there has been hardly any reaction at all in terms of extra say growing difference between the swap rates and the treasury yields. So the risk pretty much has stayed the same. So from the markets, reaction of the markets in general, at least from the big players, has been business as usual. Nothing much, although it's obviously a big news that everybody is reacting to, because the US are looking at the largest economy in the world, and the larger issuer of debt as well. So everybody in one form or another holds US debt. Simply if you are a citizen of any other country, you will hold some US debt, because your central bank does. If you're a pension, your pension will have some US debt, and so on. So going back to the markets, you see the equity markets though have reacted quite strongly to these announcements. So I can see there was a drop. This was on Tuesday. So Tuesday and Wednesday, the markets actually dropped quite a while. This is the S&P 500, and it's nothing too dramatic, but obviously it was an unexpected news, and the market dropped about 2.5%. Now they've recovered somewhat, but we're still about 2% below for the S&P 500, and the Nasdaq even a little bit more. So we're still again from about 400-500 points different. It hasn't quite we haven't quite concluded the uptrend, because the Nasdaq is still in uptrend until until we break this 14,800 point. But obviously there's been quite a pause because we've had quite an extended period of growth now. So I think it's where everybody's been kind of like excited for this growth from March, even from below, from December of last year. Now we've had almost like an unchecked growth for about 5 months, from mid-March now to mid-July. Okay. and so there is kind of like quite a little bit of nerves, and we can also starting to see the beginning of a downtrend forming now on the market, as with come on, I can see with kind of like lower highs and lower lows being formed. So it is a kind of like an uncertain time, and and a lot of this depends on the general growth of the economy, which, and this is where I'm kind of like wanting to get you to pause a little bit, because everybody is just almost like ignoring all the economic signals and think, everything is going to go right, everything will keep growing and will keep doing well. But the actual numbers in the economy are showing us a continuous decline, or slowing down more than decline. So the expectations of the market is for the economy to slow down, not to go into recession, because the recession is not being priced at all, almost, in the market, but the economy to start growing, even with a much higher cost of doing business. Okay, so let me just go back now to some more crypto related news. You might have read that, actually, before we go into crypto related news, this is kind of like interesting as well, and because talking about this trend now, this is talking about China's trade outside of China, okay, cross-border trade, and for the first time they have been using yuan more than US dollar. Okay, this is the first time that happened, and although it's still kind of very low levels, but it still is significant that that now China is weaning out very, very slowly of using US dollar and trying to increase its influence of using its own currency for doing business outside of China, and this is kind of like could accelerate the decline as well of the US dollar and the cost of doing business in US dollars, because China is the biggest buyer of US bond. So if they start buying even less than what they're buying now, it means there's going to be less demand for US bond. But okay, let's go on to some more crypto news. And first of all, let's have a look at Bitcoin and to see if we are any different from when we were a couple of weeks ago. So where is it? 26th of July. So this is where we were a couple of weeks ago, and this is where we are now. Okay, so pretty much at the same level. So nothing new. So we are just slightly below this range that we've had in the top of the range that we've had from since April, but we're still, the gray box here is still the range from last year. Okay, so what has been dominating this market now for since March. Okay, so and it's, again, I keep telling you, this is relevant, because if we break this and buy a daily close outside of this range, and a significant one, I would say about 1% or so above this range, then that's the next target, and this will happen. You see, we've been into this whatever $2,000-3,000 range now for quite a while, and then almost overnight we could see like a $5,000-6,000 increase if and when this gets broken. Now there are certain things that could cause that. there was this latest surge was down to the Ripple case. I'm not saying coming to an end, but to a partial decision. Other things that could cause that are ETFs. Now, there have been 12 Ethereum ETFs filing, spot Ethereum ETFs, which again, they're not likely to be approved. But the reason why, you see, when one gets put forward, then you get another 10, 11, 12 being presented, is simply because nobody wants to be last. Okay, so if one was to be approved, then the other ones would be approved too. So the importance of being first at the market is, outweighs the probability of being approved or not. So so people say, well, the cost of filing an ETF, it's minimal compared to the possible reward if these were to be approved. Are they likely to be approved now? No. Is a spot ETF for Bitcoin or for Ethereum coming tomorrow? No, probably not. But there are some chances that this may happen this year. Okay, and when that happens, we could see that could be the catalyst to Bitcoin moving to the next level in price and to just grow by 15-20% almost overnight. Okay, one of the biggest exchanges in the world, Coinbase, is, as you know, being sued by the SEC, and they have anyway announced a quarterly loss and drop in revenue, but this is down in general to the decreased levels of business in cryptocurrency in general. So transaction numbers have gone down, and so obviously the revenues of Coinbase have gone down as well. But at the moment is looking a little bit not the best right now, but could also be an opportunity. Now, what this could change. I mean, this is just a share, okay, of a company. But what they're going to do, apparently, they're planning to file a motion for dismissal of the SEC case in its entirety. I mean, this is kind of like what the Coinbase lawyers have announced. Obviously, they will talk that possibility up again. Is that likely to be thrown out or not? I mean, I don't know. Only the judge will be able to say, but probably not. Okay, but it's important at least that they are trying to see if this becomes a possibility in the near future. Again, could be another thing that could bring some more volume to the crypto world, because obviously Coinbase, not so much for the rest of the world, but for the US is the main exchange, so it could make a big difference as well. Other news, MetaMask, and I know that kind of most of you, if will probably have the MetaMask installed on your computer. I've now, for the first time, enabled a staking feature directly from the portfolio app. So at the moment, the staking feature is for Ethereum and Polygon. So you can see this is what it looks like. So mainly is using Lido and Rocket Pool for Ethereum, and using Lido and Stader for Polygon. So kind of like everything, all the the crypto infrastructure is getting better and better by the day. So these kind of staking directly from your wallet have been available for a while. So I, for example, use it directly from my ledger and from the Ledger Live app to stake in different blockchains. But obviously, the easier it is for everybody, the better it is. And so this is MetaMask is the latest one to join to join the game, especially with being one of the widest used interaction between wallets and Web3 applications. Now, is Jonathan in the room? I haven't seen him come in, because it's something that, if he is, I would like you to comment on, but he's not here yet. But there's a couple of things actually. This is quite interesting, and I'll let you read it. I'll let you read it yourself. But it would be interesting to, if you listen to Janet Yellen and they her surprise to reaction to the Fitch's decision, and it's quite funny how kind of like she doesn't understand the working of the rating agencies for being in such a high position. But they are. I tend to agree with Charles Hoskinson, especially with this, this latest statement that I'm not going to repeat aloud. Another thing that actually is quite important for this kind of like real world usage, and as I've been telling you for a while, how oh, that's Jonathan. Okay, we'll get into comment in a second. But one of the thing is how now countries where the economic system has collapsed, excuse me, are turning to cryptocurrency as a different way of doing business. In particular, Lebanon, which at the moment is one of the countries with the with inflation running at 254% yearly, has actually turned to the Tron network, which is which is being adopted quite quickly and quite widely. Has become the most used blockchain network in Lebanon. Okay, now and this is, as I said to you before, countries like Venezuela, like El Salvador, like Argentina, where the economy is rapidly falling and in trouble. These are the countries that would use this technology more readily, because they need an alternative to something that is not working. So for them, it's not something, we are, for most of us that live in kind of the first world countries, being involved in cryptocurrency or not is an option. Okay, and it's an option that most people take because they want to make money quickly, probably, but in reality, what these solutions are bringing are a different way of conducting business. And when the money in your pocket loses value pretty much every day, then you want to find an alternative. Okay, and this is why I always thought that the biggest revolution in crypto will come with adoption from third world countries. Okay, and although individually, both the economy of Lebanon, the economy of El Salvador, they are tiny compared to the, let's say, the US or European economy. Put together, if you have enough of these countries put together, they can start a snowballing effect. And also, the important thing is that you kind of reduce the reliance on other countries to manage their economy. So these are important things. This is another news of similar things in Bolivia. So this is kind of the deputy prime minister of Bolivia. He actually is trying to promote a bill to legalize cryptocurrency in the country. Now, again, I'm not going to say that this is going to happen, but these things are being talked about at high level. Okay, so it's not just a crackpot politician that is trying to make himself known. These are kind of like important politicians in these countries that are talking about these things in a serious way. So will it happen or not? We don't know, but it might happen sometime soon. Jonathan, as you're now in the room, I just wanted to get your comments on the Catalyst testnet development on Cardano. And I think, for those of you who will be probably double Greek, okay, but Catalyst is the community fund project for Cardano, and this is kind of like a new development of this project. Jonathan, you have the mic.
Okay. Hi everyone. Yeah, so Project Catalyst, if you don't know, is the largest innovation fund in the world now. So they distribute about, at the moment, about $16 million worth of ADA Cardano every 3 months when they're running on schedule. And they paused after the last fund for about probably 8 months, something like that in the end. And they're just getting started again. And the reason for the pause was they have rebuilt the underlying infrastructure. Effectively, they were growing fund on fund, logarithmically. So the final figure of trying to maintain the $60 million and the 3-month pace was really taking its toll. It's a small team as it is anyway. So they just rebuilt the whole underlying technological infrastructure of this fund, because it's all blockchain driven. So anybody who holds ADA is allowed to vote in the innovation fund, and you're voting as to which projects get funded or not. And the bonus of it is that you get paid in ADA for voting. So all you have to do is have an opinion, and you can get paid for it, which is very cool in crypto. And the projects who actually put the proposals forward for funding are anybody in the world. So if you have an idea that you think the community would back you on, that involves building something or reaching out to people, it can be anything that's Cardano, that's beneficial to Cardano. Then you can put a proposal in and see if you can get a community vote to back you, and then your funds are distributed over the timeline that you set in your proposal. So 6 months, 12 months. And you get to deliver on it, and you're paid for the privilege of doing so. And the underlying infrastructure really kept that in a linear format. So previously, you had to run a fund, then shut everything down, and then reset everything, spin it back up, and get going with the next fund. And now they've got it so they actually have an asynchronous possibility within the tech to actually run those funds in parallel if they want to. And they'll do that certainly from now on in terms of having a test net, which is what this is talking about here, in that they can run a fund in almost like a side chain scenario to the main chain innovation fund. And that gives them the ability to test features, to change things, because obviously this is now a significant source of revenue for innovative teams in developing on blockchain. And when you have wealth being generated, you also have a tax being generated. So there's people just working just as hard to bring the system down as there are to build it up. So they are battling bots, particularly because there's other revenue streams within the Project Catalyst. Tell me if I'm going on too much, Luca. I could talk for hours about this. There are other revenue streams within Project Catalyst, like you can become a reviewer of the proposals. So you can express an opinion early on as to whether the proposal is well written, whether it's well structured. So if you've got a background in grant writing or anything like that, you can actually earn from that position. If you're willing to just help proposals with their ideas, maybe connect people together, then you can get onto a challenge team. You can get funded for that. So I'm on a challenge team for one of the challenge settings within the fund. You can also obviously earn from voting, like I mentioned already, and you can also earn from introducing people to the network. So there's a referral scheme. If you tell somebody about it, they put your name down when they write a proposal, it gets funded, then you can get a reward referral as well. So there's a real drive to draw people into this ecosystem, give them the funds to build things, good ideas, and so far we've seen incredible results. The fund has been running for nearly 2 years, and there's been 600 projects funded and written their closeout reports, so actually delivered to completion, to the satisfaction of the community on their ideas. So that kind of drive and growth is a real real world tangible utility being built, which is the most exciting place for a blockchain to actually start to achieve. So yeah, It's great.
So, yeah, I just wanted to kind of frame it a little bit. This is kind of like a little bit of news, and you can see how long Jonathan can talk about it. You know, of a tiny, I'd say, tiny bit of news for one of the blockchains. You know, which is obviously not the only one in the world. So, if you want to know more, Jonathan obviously is a stake pool operator for Cardano, so the best person to go and find out Cardano news. So, if you're interested in hearing more news about Cardano, then I would highly encourage you to go and follow Jonathan and follow his session, which he does every Friday after this at 9:30 a.m. So just a few, just less than about half an hour from now. So Jonathan, just post the link, please, so everybody that's interested can come and follow you. But what I wanted to also make you realize that these are the kind of things that blockchains are working in on the background. And sometimes, I get people asking me all the time, what about this new coin, or what about that new coin, what about this project, that project that nobody's heard about, which fine, there will be projects emerging eventually. There will be some that don't even exist now that will become big projects in the future. But I'm saying some of the tried and tested projects, they have been working for years and coming out, producing their goods right now, because the result of this is years of work. Okay, the result of many other things that blockchains like Cardano, like I don't know, Polkadot, like Ethereum, like Solana. So all the work the developers behind these blockchains are put in is coming out now in new products. Okay, so and looking at the potential of these tried and tested projects already in the future, if you just look at it as an investor, are incredible. Okay, without having to look for the next moonshot, I just wanted to show you, maybe a couple of these. Let's have a look as we're talking about Cardano, for example. Look from an investor point of view. Okay, so look at where we are right now, about 30 cents against the without even hitting new highs. Look at the all-time high, which was in 2021. We're talking about 10 times here. So the probability of that being hit again once we get the next bull round is very high. Okay, probably, I would expect the new highs to be reached from here. So the next bull run, the next high probably is going to be higher than this, as the next bull run for Bitcoin is higher than the previous high, probably. So these are the kind of things that we can expect. So this is Cardano. Another of the main projects is Polkadot. Polkadot again, $5, high of 55, so 11 times. If you want to look at, I don't know, Solana, although it's not one of my favorite projects, but still talking about $23 now, 260. So again, 11 times. The difference is Bitcoin and Ethereum will have smaller multipliers because they haven't come down as much. So they are kind of tried and tested projects that have been around for a long time with a lot of volume behind them. So they haven't kind of like come down as hard, but still, even Ethereum is almost like 3 times to get back to the previous high. So we found 2008 and about 5,000 was the all-time high. Again, Bitcoin as well is 30,000, about 69 was the all-time high. So you see all these projects. Just look at the main projects. They are here on the thing. So the way I look at it, I go down the list. Obviously, eliminate the stable coins, because stable coins are stable, so they're not, they won't go up and down. They'll stay at about $1. I eliminate the stable coin, and personally, I eliminate the meme coins. Okay, I'm looking for projects that do something rather than just hype-driven projects. So have a look at some of these, and just keeping yourself to the top 20 coins. You will see. Look at Litecoin, for example. Litecoin recently had a what's it called? A halving event, the same as will happen to Bitcoin next year. So, so the rewards for miners have actually gone down. Again, let's have a look at Litecoin again. $80 against 400. So And again, 5 times as much. So, you know, the potential as an investor of cryptocurrency is huge. What I'm trying to say though, you know, you have to weigh the potential up against the risk. Okay, so the risk of the projects that have been around for a while and have got you know, quite strong communities, it's much lower than going to project that's number 2000 or something like this with very low volume, which could be the next star that grows 200 times in 6 months, but could also be there's a higher probability of going to zero. So that is what I wanted to say, really, to just concentrate and focus on tried and tested project, because they still have massive potential in these. And maybe where there is a higher potential, rather than go and find a completely new coin, find a community that you really like. So again, looking at the top, you know, again, I would say top 20 would be enough. Look at the top 20 at the layer 1 projects, and look at projects within that community. So if you like Ethereum, go and have a look at Ethereum tokens. You like Cardano, go and look at Cardano tokens. So layer 2 projects that living in that kind of blockchain. And those are the ones that if you believe in the main project, whether it's Ethereum, Cardano, Solana, then, you know, there is even more reason to look at projects that live in that kind of environment, that can, where the potential of growth can be, the risk is higher, but obviously the potential of growth is higher as well. So there's many projects that are obviously on Solana, on Cardano, on Polkadot, on Tron, on Ethereum, and so on the Binance Smart Chain, that if you believe in that chain could offer better potential. Okay, so let me stop sharing now. Let's see if we just gone beyond 9 o'clock. So I will be happy to take a couple of questions, and then we close the session for today. Anybody has a question I would like to ask? Please unmute yourself. No, everybody kind of like. Jaya, do you want to ask a question? I don't know. You went live again. You just appeared again. No.
No, I was listening even I was on not on the video. So
Okay.
yeah.
All right, no problem. Okay, so if nobody has any questions, then we'll close the session this time. So I'm back in the UK now, so you know, future session, the Monday and the Friday sessions are going ahead as normal. Okay, so we'll be seeing you again on Monday for those that are part of my community, or on Friday for the Crypto Hour. Okay, so
Thank
goodbye,
you so
everyone.
much, Luca.
Have a great